All right, so Tom's good where he's standing?
Yep. So it should be live in like 2 seconds.
Part.
Yep.
Okay, so it looks like we are live. So we're going to just make sure that we share this. And so today we're talking about mortgages, and we just want to be sure that we're helping you if you've had questions with whether you should refinance, and what some of those things that you should be thinking through are. So I'm going to go ahead and just let you know. So I've got Tom Cramer here, who is with Wintrust Mortgage, but also Tom just helps to answer all of these questions that we have for our clients and any other questions that we get specifically. So that's why I've invited Tom here, because he knows all of the details about mortgages. So just a quick reminder that if you have any questions as we're going through this, we're talking again about mortgages, refinancing, just some of the things to consider and think about right now. I also just want to remind you that the purpose of these videos, so we've done a legal update, insurance, now mortgages, and this is just because while we're all at home, there are things that are happening outside of our walls we just don't know about. And so we want you to know what's happening if you need these things done, or if you need to get something in place, that there are people who can help you and how they've adjusted their businesses to be able to do that. So today we're talking specifically about mortgages, and if you have questions, please feel free to put them in the comments. I will keep watching them, just so that if we get a question, that we'll put that in there and we'll answer it. But we've also just thought of some things that are affecting most people. So those are the things that I'm going to walk through with Tom. And yeah, please feel free to comment if you have anything. All right, so Tom, why don't you give us just a big, broad overview of how this virus, so COVID-19, is affecting your business, and how are you working through it?
Sure. Well, it's a great time to be a loan originator right now. With the rates are so low. I've been very fortunate. We're very busy with helping people lower their payments, lower their, so they give them more money for you to invest for their college funds.
Sure.
But it's kept me at home. It's kept me away from my work family. The benefit of working with a group of people is bouncing ideas off each other or scenarios off each other. And so now we're Zooming with each other. But we're in our homes, working safely. It's great to be outside in the sunny weather.
Yes.
On your deck. It's beautiful. But I really only need my cell phone and my computer.
Okay.
And my clients know that they could always get a hold of me. So
great.
Yeah.
And that's the thing, is basically we can upload things to Refinance. We can get you those documents through those systems. So that's helpful to know that everything can still happen. You can still approve mortgages. You can still find out if someone qualifies through this period. Okay, so let's just walk through what are some of the things. I think there's a few probably big reasons or things that are keeping you busy right now. Walk us through what's keeping the mortgage environment, what's keeping you busy.
So thankfully there's still purchase business happening, so we're getting those closed in less than 30 days still.
Okay. So these are people buying new homes.
So buying new homes, right? So that business is obviously probably at least 70% down from where it should be at this time of year. But it's still a great time to buy when rates are so low and the purchase and the prices are kind of stabilized or actually come down a little bit. So we're very busy, mostly with refinances. So probably with like any other lender, but it's really just going back through all my clients' databases, my databases, and seeing who's going to benefit and who's not, and then also just answering the phone when it's ringing.
Yeah. So do you find that it's kind of more people that you're reaching out to saying, hey, you could potentially benefit from a refinance, or do you feel like it's more people reaching out to you, or kind of a mix equally?
Yeah, good question. So it's I'm surprised on how many people are in tune with listening that rates dropped.
Yeah.
So when they hear that the Fed is dropping close to zero, a lot of them think, hey, mortgage rates might be zero, but they're not zero. And we try to get the emails out saying, hey, they're not zero, but it's a great time to talk to me. So I am picking up the phone more than I thought I would. Usually it is us reaching out to them.
Sure.
It's great clients of yours that are calling me because
Sure.
you're telling your clients to call. So.
Yeah, and those are the things as a financial advisor. I think probably one of the main reasons that mortgages are probably getting so much attention since rates have dropped, since the Fed did lower rates. It's one of our biggest expenses. So our home, repaying that, the debt payments, that's one of our biggest expenses that we have as a homeowner. And so if your income has lowered or you've been furloughed or, you just want to try and take advantage of something that could help with that cash flow, I think that's probably one of the biggest reasons it's probably first in mind of most people. So, okay. So let's talk through. So you've got basically if you're reaching out to people who might have like a greater than 1 percentage point refinance drop. So if their rates were going to drop by more than 1%, that might make sense to reach out to someone like that. If they're going to drop, so maybe PMI or lower their payments, those are other reasons.
Right. So it's not always 1%. Like it depends on the loan size. So if it's a good size loan amount, I usually look at it as the payback. The cost of getting that refinance versus your monthly savings, and divide those two. And if the payback looks like it's in a reasonable time, that then it's worth it. But if you're going to move next year, but the repay takes 12 months to make it up, then I tell people that it's probably not for you.
Yeah, exactly. Because if you have to pay money to get that lower amount, and you're going to be moving, that makes
a lot of
sense.
people, we could finance it in depending on what the loan to value is. We could finance the closing costs.
Okay, rather than them writing a check.
They could bring us, zero to closing. They could take a cash. They could cash out if they need to roll maybe a first mortgage into a second mortgage. And so now that second mortgage is tied to prime, and prime moves all over the place. So if they want to fix it to a nice low interest rate, and not have to worry about that fluctuating second, that's a big reason to refinance.
Okay. Yeah.
And then I've gotten a lot of people that are shortening the terms. So like today I locked in a refinance and they're cutting 8 years off their loan but paying the same payment that they're paying now. Another one yesterday that's paying $100 less and going to a 15 years. So I'm excited to see the people that really want to actually pay off their houses.
Exactly. So I think that's one of the biggest things is that if I could lower my payment and I could lower the amount of overall interest I'm paying for the mortgage, or cut that term even shorter, and especially 8 years, like those, if you're trying to reach financial goals, those are things that are absolutely going to help you. So kind of a reminder in here, because I think when we hear some of these other little things, like we can defer payments, things like this, one of the things we naturally think is how can I take advantage of this situation, and not always necessarily, with harsh intent or anything. It's just that how can I do something smart or, be smart during this time. So what we would probably caution people is to always reach out if you think you can defer those payments, or if it makes sense to, because there are some things that even though it won't hit their credit score or anything like that, or be a defaulted payment, what are some other things that they could get maybe tripped up by that they didn't realize if they do these things?
Right. So Fannie Mae and Freddie Mac, the big banks that buy these loans, they set the underwriting guidelines, and right now they haven't changed the guidelines that you have to make your payments on time for the last 12 months to be able to qualify for a new mortgage. So if you defer that payment, your credit might not be getting hit because they're not allowed to destroy your credit. But
But you're not making the payment.
But you're not making the payments, so then if all of a sudden you have to move, you get transferred, you got to move, and you want to buy a new house, and you realize, I have to get past that waiting period.
Yeah.
Or if they defer those payments, and now all of a sudden they have to play catch up at the end, and now that's a big number to come up with, and then they reach out to the bank again saying we're having difficulty coming up with this amount. We need a loan modification. Well, then modifications, it's a 4-year waiting period.
Okay.
So that's why I tell people, unless you really are in dire straits, please try to make that payment.
Yeah.
Otherwise, you could be 1 to 4 years out waiting before you get another loan.
Sure. Okay. And that's great just to remember, because we do want to be smart with our money. We do want to be wise. We want to take advantage of things that help us, but not in a mean-spirited way, but just really good to be thoughtful. So that's helpful to know that there are other ramifications besides just the things that we're thinking through or we hear just really quickly. There are other reasons why we might not want to do something. Okay. So let's walk us through, because just getting a mortgage or refinancing, we have different types. So we have new purchases. Talk us through, because I wonder if people who have small kids at home are trying to finish the school year, and then maybe they'll think about, are we going to move?
Sure.
Whereas maybe before, when kids were in school, parents could go do some of those things and they have the time and the capacity, but maybe they're waiting until school's done to say, okay, then we can start thinking about, should we move? Are we going to move? Walk us through new purchases, kind of what you're seeing on that, and mortgages.
Yeah, so the spring market used to be right after the Super Bowl, but now they're saying, well, we think it's right after the lift is, the stay-at-home lift is lifted in there. So we think that the spring market is now going to be possibly June.
Wow.
And so I think that there's a lot of pent-up, people that really want to buy something.
Okay.
And so what they want to do is make sure they reach out to their lender and get pre-approved, pre-qualified. The difference between a pre-qualification and a pre-approval is a pre-qualification is someone that gets onto my website and fills out all their income and asset information, and I pull their credit and I run it through an automated underwriting system, but I didn't actually review their documents to see if their income was correct or their assets are where they need to be. And so the best thing to do is upload your tax returns, your pay stubs, and your bank statements so we get a total picture, and then we could call that a pre-approval.
Okay.
And that's what realtors really want to have in their hand, because they don't want to be driving around showing and getting excited about a house, and then you get a contract, and then you come to me and I say, you just became a 1099. That means you're self-employed. It means you really have to wait 2 years.
Okay. Yeah.
It's really a good idea, especially before you sell your current house.
Okay.
Get pre-approved, because you don't want to have any surprises after you sell your house and realize you have to wait until you buy that next house.
Yeah. Okay, that's helpful. So even just regarding sales of existing homes, like, are you seeing anything on homes that, like, new construction, anything like that that's changing? Or?
Yeah, so my new construction referral partners, they have been slower because people are not coming into the showrooms.
Okay.
They're doing virtual listings online. So, and I'm seeing our realtors doing a lot more of this virtual listings.
Sure. Which is a great way, right? To see a house without even having to drive there and back.
Right.
I can remember when we were looking for houses, we would always look online at the pictures, and then even beyond that, you could probably rule out, half of them maybe, and then drive to the one. So I can only imagine now people who are saying, I could do all this virtually as long as it's listed and shows. Okay, walk me through a little bit. So refinancing, so you're getting all of these, let's say, applications or requests to refinance. Is there a difference between someone who's buying a home versus someone who's already in a home just wants to refinance? Any difference on who gets chosen first, or is it first come, first serve?
So with processing, purchase is always very important to us, and it's our bread and butter. I mean, it's our future. It's our importance. So the importance of reviewing files is going to always be purchases first. If I get a purchase that's going to close in less than 30 days, they're going to jump all over that and make sure it closes in 30 days.
Okay.
But a refinance, they're already in your house. There's no extreme rush to get it done. I know people really want to get that lower payment.
Yeah.
So we take those in order of the lock expirations.
Okay.
And so the refinancing right now is taken anywhere from 60 to 70 days probably.
Okay. And now walk me through, so you mentioned something, the lock expirations. Explain what that is.
So rate lock is us promising our investor a certain interest rate, and when they promise us the rate as long as we give them the loan by the time of that expiration date they give us. So there's lock periods of 15, 30 days, 45 days, 60 days, 75 days, and 90 days. And then our new construction, we do have extended rate lock programs. So if you're building a house and you want today's low rates, we could actually help you secure that low rate. And actually, so we basically take today's rate, we cap it by 0.25%, and then if there's a lower rate come time closing, we can float down to get that lower rate. But anyway, once you lock your interest rate, if the rates go up or down, that's your rate. And so it's kind of like buying gasoline. You fill up your tank at that $2. If they drop it to $1 the next day, you already got the
Exactly. Well, and that is just helpful, because when I'm buying a home and maybe a first-time home purchaser or any time, multiple times, it's good to just be reminded that I'm buying it, and if I'm getting a mortgage, I'm actually borrowing money from someone. And we typically think we're borrowing from the bank or where we're going to get that mortgage, but there are actually then investors that you go to and you say, here's a mortgage, and they're saying, yes, we'll loan that money, and then they're going to get paid to do that. So there's this whole system of people loaning money so that you can borrow in order to get it. So that's really helpful to understand.
Right. So when we close a loan, obviously we're funding it with our own money, but we want to sell it to Fannie Mae or Freddie Mac or one of our other investors, so it frees us up more money.
Okay.
To use.
And that's helpful just for us to understand that there's a whole other side of, yes, you want to help people that need to borrow to get into homes, but there's this other side of, well, we have to have the money to do that, and that comes from investors. I did get one question, so here in the comments, what kind of rates are you typically seeing now? And I would add to that, are they fluctuating frequently, or are they pretty well staying steady?
Great question. So when this COVID-19 first happened and the Fed dropped their Fed rate close to zero, we saw it was all over the board. We were getting 6-7 changes a day up and down. The lowest on a 30-year fix we saw was probably 2.99, and then literally a day later it jumped almost to 5%.
Wow.
So a lot of fluctuations. Now I think the market's kind of stabled out. We've seen it actually get a little better in the last couple of days. So credit score has a lot to do with interest rate, what you get. So there's a lot of factors. It's not like just saying, hey, what's your rate today? Because we got to know what your credit score is, what your loan to value is, what the property type is, and then how long a lock you need. So rates on a 30-year fixed are ranging anywhere from 3 1/8 probably to 3.5, depending on what your credit score is.
And is that for a 30-year?
30-year,
okay,
yeah. 15-year fix is probably around 2.6 or 2.7.
Okay, and then if it's, I know we're going to talk about this in a second, but just for like a jumbo size mortgage, so you have different sizes of mortgages, and every year you shared how that changes the amount. So if it's over that, it's called a jumbo rate mortgage, and those rates are even higher, right?
Right. So any loan amount over $510,400 is considered non-conforming, and that is where the banks hold the money because you can't sell it to Fannie or Freddie. So right now there's not much liquidity with banks right now. So we're seeing the jumbo market kind of drying up. We're losing some investors on it. We're definitely tightening of the guidelines. So your interest rates kind of get, if they don't have a big appetite for those loans, they're not going to give you a low interest rate. So
okay, and that's helpful, and that could even be why maybe some home sizes. I think just realtors might have said, over 500,000, those homes are just kind of sitting. Right. Even in the past couple of years, so not just specific to this, but even before that. And so if that's happening, it's kind of a domino effect of then not seeing the mortgages come through because people aren't maybe interested in purchasing that size of a home.
So this whole pandemic has also increased the down payment for jumbo loans. We used to be able to do a less than 20% down. Now it's you have to have 20% down. You have to have 12 months of reserves, payment reserves. A conforming loan, I could still do a conforming loan with some down payment assistance programs for as low as 1% of the loan house price.
Okay, sure.
There's still a lot of flexibility in conforming loans. But the interest rate or the credit score requirement for FHA has gone up, and so we have seen some tightening on that.
So let's talk through that. So if you're wanting to refinance, so some of the standards that usually we've been used to, and that's a certain credit score that you have to have. Talk me through that a little bit, because I think maybe some lenders are trying to control so many people refinancing by the credit score that they're requiring. Walk me through a little bit how that's changed with you specifically, or just even what you're seeing within industry.
Okay, so 740 is the credit score you really want to have to get the best interest rate.
Okay.
And so when I'm reviewing someone's credit report, if it's just under 740, I could play around with their revolving credit balances and run a simulator to see what would it take to get you over 740, which would then give them the most attractive interest rate.
Okay.
So that's the score you really want to hit. 640 is the lowest you want to be, and 640 is going to give you a much higher rate.
And even that 640, that's increased from what it used to be, right?
Yeah, FHA was 600 before.
Yeah.
620, I think.
Okay, so I mean that's a good thing. Maybe we're getting better quality of lenders, people borrowing money, but also just saying, you need to meet these minimum standards.
Right.
So that's helpful to know, because people who might have qualified before might not now if something hasn't changed with their financial situation. Okay, So then, something I think that we all want to know if we are refinancing, if we're buying a home, we think normally I just go to the title company and I sign everything, or I come see you, whatever that looks like. To walk us through what that looks like now, since we can't just walk in and sign papers.
Right. So I always went to all my closings to make sure I shake the hands of the people that I've been talking to over the phone and the internet for the last month. And so it'd be always an exciting party to be at. The realtors there, the attorneys there, I'm there, and now it's none of that. It's the people pull up in the parking lot and the title agent runs out and hands them the file to sign in their car.
Okay.
Or they go to a separate room that's sanitized, and the realtors and the loan officers and the attorneys are not allowed to come in. So a lot of the attorneys are Zooming or Skyping with their borrowers to kind of explain the documents to them. So I try to review the documents before their closing, so if they have any questions, it's mostly on the closing disclosure, because that's where all the numbers are. That's the questions which you have.
Sure. Okay. No, that's really helpful. Do you feel like there's anything we've kind of missed, or that you're getting a lot of questions about that, that would be helpful for people to know? Or I feel like we've touched on so many of the questions that we're getting and that we're seeing, but I just want to make sure if you thought of something that you said, hey, I'm also going to check, let me check, because we did get we got a question about what rates people are seeing, and then there's a couple more, so let me just read through these. Are many of those loans, once refinanced, being sold off or holding stable with the lender that you refi with? So I think the question here is, you get the loan. Yeah, what's then happening? So then,
so everyone always, that's the biggest question. Are you going to sell my loan? Everyone's loan is sold.
Okay.
It's the servicing of it.
Okay.
And actually at Wintrust, we service 80 to 90% of the loans we originate now. So most of the big banks, they also, like the Chase and the Bank of America, you'll originate it and they'll service it.
Okay.
But the great thing about us is we could use other investors, Fannie Direct, Freddie Direct, and some other investors, and just find out what program is really going to best fit our customer. So I've had loans that were turned down by one investor, but then I was able to take it to another investor without them having to go and make an application to someone else. So it's nice to have the flexibility. But if I have to broker out a loan, then of course I won't be servicing it. But
so that's what's great, is you have the ability to kind of shop around within who's available to you to even see, okay, if I can't do it here, then where can I? And they can still work with you, so they don't have to be switching and reapplying, getting pre-approved, things like that.
Yeah. So we're not only shopping the best interest rates, but we're shopping the guidelines.
Okay. All right. So let's just see. We've got one more question, and we'll maybe this will be from some things that you're hearing, maybe from realtors or movers. This one says, how does one navigate moving in and out after a purchase during the current lockdown and quarantine situation? And I know I've really been surprised, because I've known a lot of people actually who are moving during this time, and they're able to buy, and then their homes have sold, or they're having to adjust the price down to get it to sell. But have you heard anything specifically from movers or buyers and sellers that you say that would be helpful for them to understand during that process?
That is a great question. Actually, I have my nephew that's closing next week, so I'll have to ask him.
Okay.
But, I haven't talked to anyone after closing, so it seems like they're just, wearing the gloves and they're wiping down the house. Some are having it professionally cleaned before they moved in. So that would be my suggestion, is just, if you're really concerned about it, have a commercial cleaner come in and sanitize the house before you move in.
Yeah, and that's what I would say from realtors' perspectives anyway, just even going to be able to see homes. I think what I have heard from different people who have been buying homes, but then also realtors just saying, no one can be in the house, or at least definitely asking, to say, hey, if you can leave, so then they can go in, and then cleaning things, making sure things are wiped down. But then if you do sell your home and then you're moving into a different home, just being sure to do what you feel is comfortable. So like you mentioned, getting everything and clean, so you feel like you're starting from scratch. Those have been I think some of the main things that I've heard people doing. And then also still being able to use movers. It's just, you're not going to be there, but that might be kind of normal anyway. Like you're not necessarily there. They're packing things up and doing that for you. So I think some of these things, it's interesting. Those things are still happening normally. It's just that you can't be there like you were before, so you're not present, but they're getting done. So it's interesting, that question, because next week we are going to be hearing from a mortgage or a real estate attorney. So hearing more of these things for what is it that, when you buy or sell a home, what is it that you know how you'll come up with something and with inspection might come up. And so now you have the opportunity to go back to the buyer or seller and say, well, we want this done. So I've been curious what's happening, what are we seeing, some common things there. So we will touch on that next week. So we'll be getting some more information. And then I'll also add it in the comments if we do find some more definitive things. But those have been, great questions that we've gotten so far. And I think this was really helpful just to understand, because there's so many moving parts. And I think this is so important to people just because it's one of our biggest expenses, probably for most people, is their mortgage. And so what can they do that's smart, that they can actually benefit from over the long term to really help to reach their financial goals. Right. So thank you so much for taking time to talk through these things. This is what we really appreciate working with Tom, because he thinks through all of these things. We're usually reaching out and saying, we have a client with this situation, and then we can get them then in touch with you if that's helpful. But these are the things that we want you to know that you can take advantage of. And that you still can take advantage of things like this to reach financial goals, but also just to better your financial situation and to work with great people who will take care of you. So thanks so much for all your questions, and we'll talk to you next week. All right, and then we'll see, and this gets paused.